Okay students, so the next concept which we will discuss is outstanding expenses. Outstanding expenses. Okay, it can also be called as accrued expenses. It can also be called as expenses owing or unpaid expenses or due. Okay, it can be called as anyway. Now see, what do you mean by outstanding expenses? These expenses are related to the current year, okay, to the current year, but remains unpaid, as they are the expenses of the current year, so they must be debited and charged to the profit and loss account of the current year. Okay, now the expenses remained unpaid so far during the current year, so they are the liability of the firm. Okay, two important points here. What? Liability of the firm and charge to P&L account. Okay, two important words here. Now see, let's take an example. Okay, let's take an example. The firm pays rupees 5,000 wages per month. Okay, one thing, when I discussed the difference between wages and salaries, right, I've said that wages should be paid on daily basis. Okay, it is no compulsion. There is no compulsion that wages have to be paid daily. Okay, on daily basis. It can be paid on weekly basis. It can be paid on monthly basis. Okay, so per month to its employees, to its workers. Okay, the firm pays 5,000 wages per month to its workers. Now wages are paid on the first day of next month. That is, wages for the month of January 2011 will be paid on 1st February 2011. Okay, now let's try to understand this with the timeline. Okay, let me draw a timeline. I've told you right in the previous video that one accounting period will have how much? One accounting period will have 12 months, right? So our accounting period will start from 1st Jan and will end on 31st December. Okay, let's take an example of 2011. Now I've explained you that on 31st December 2011 we'll have to close our books of account, right? Wait, just let me make some correction. Yeah, 31st December 11. Okay. Now I've told you that we will close our books of accounts on 31st December 2011. Right? For the year 2011, our books of accounts will be closed on 31st December 2011. Now I've told you the reason why we close our books of accounts on 31st December, because we want to know how much profit the company has earned. Okay, what is the financial position of the company and so on, right? Now see, let's do a timeline again. January, Feb, okay, Jan, Feb, March, April, May, June, July, August, September, October, November, and December. Okay. Now see, there is a worker called X. Okay, his name is X, Mr. X. Okay, Mr. X. Now, Mr. X has joined a company, say for example a factory. Okay, as a worker. Okay, Mr. X joined on 1st Jan 2011. Okay, now do you think as soon as Mr. X joined on 1st January 2011, he will be paid wages for the month of January? No, right? What he will have to do? He will have to work from 1st Jan 2011 to 31st December 2012. Right? Now your parents used to get salary. Okay, so for example, they'll get salary for the month of March on what? April. Simple. They'll work for the whole month, 31st March, from 1st to 31st March, and they'll get the salary from 1st to 10th April. Simple. This is how it is done. Now see that what's the concept of outstanding expenses? Okay. Now see, for the month of January, the salary, the wages, the worker will get his wages on 1st of Feb. For the month of Feb, he will get it on March. For the month of March, he will get it on April, and so on. Right? Now, this all, see, June, July, August, September, October, November, right? Now, for the month of November, the work he has done for the month of November, when will he get his wages? On 1st December. Okay. Now, for the month of December, now this is the part where we will have to understand outstanding expenses. Okay. For the month of December, he has done the whole work from 1st December to 31st December. And when will he get his salary? When will he get his wages? On the 1st of January. Okay. Which is the next financial year. See, our year will end on 31st December. This will be the end of the year, 31st December. Okay. But for the expenses, for the work which he has done in the month of December, he will be paid wages on the next month of January, which will be next financial year, next accounting period. Okay, now this is where the concept of outstanding expenses comes into play. Okay, now see what we have to do. On 31st December 2011, we have to close our books of accounts. But the wages for the work done on December, okay, this is the expense of current financial year. This is the expense of what? 1st Jan to 31st December 2011 period. Okay, this expense relates to 2011 period, right? But when are we making the payment? We are making the payment on 1st Jan 2012. The very next day is 1st Jan 2012, which is a new accounting period. Okay, which will start from 1st Jan and end on 31st December 2012. Now, what does the accounting standard say? See, whenever we are at the year end, okay, we have to close our books of accounts. So, the wages, he was paid 5,000 per month. This wage for the month of December, December will be a liability. Liability called as outstanding wages. When we close our books of accounts for the year ending 31st December 2011. I hope you are clear. The expenses, okay, see, work has already been done. Work has already been done, right? We already got the services of Mr. X during this December. Okay, so these expenses, it relates to the current financial year, right? So what will we have to do? See, journal entry. I don't want to cover journal entry right now, but let's just try to understand this part. Okay, see, the expenses is for the current year. So what will be the journal entry? Wages account debit, because wages is an expenses, right? Debit all expenses and losses. And now, say for example, we paid the wages instantly. Okay, what would have been the journal entry? To cash account, cash what goes out? 5,000. But say for example, this is for the December month. Okay, now can we pass the journal entry in the month of December? No, because the question has said that wages for the month of December will be paid on January 2012, 1st of January 2012, right? So this journal entry will be completely wrong for us, because wages has been, this journal entry is perfectly fine. This is correct, okay, because we will be charging the expenses to the P&L account of the current year, because services has already been given by Mr. X, right? He has already worked for the month of December. So this journal entry is correct, but this we are doing wrong in this journal entry by crediting cash account, because cash has not gone out of the business, right? We'll pay on the next day. So what will be the journal entry? What will be the journal entry on 31st December 2011? What will be the journal entry? The journal entry will be wages account debit to what? Outstanding wages account. Simple. Wages account debit to outstanding wages account. Okay. Now see, wages is an expenses. We have debited expenses. Nominal account rule, debit all expenses and losses, credit all income and gain, right? And we have what? Created a liability. You know that liability will always have credit balance. Credit balance. Now I'll discuss this in a separate video. Okay, I'll be covering journal entry, golden rules of accounting, wherein I will explain you in depth all these rules. But I hope you know that liability will always have credit balance. So if our liability increases, we will credit our liability, right? So outstanding wages is a liability, because we have to pay these wages to the workers, right? So we create a liability on 31st December 2011. This is the concept of outstanding wages. Okay, I hope you have understood. If I tell you in short form, what is in brief, what is outstanding wages? We close our books of account on 31st December every year. Now all the expenses related to this month will be our outstanding expenses, because we'll have to close the books of accounts. We'll have to show our liability. Now we have to pay this. Say for example, we did not show this liability, okay, and next month we simply paid the cash account. We simply pay the wages, okay. So it will be completely wrong, because services has not been done in the month of January. Now how can we pay direct in the month of January? Okay, so this is the concept of outstanding wages. Now see what will happen on next day, 1st January. What will happen? Now the payment for December will be done on January, right? So what will be our journal entry? We will debit outstanding wages account to cash account. Okay, see, we are debiting liability. So when we debit liability, our liability will be finished, and we are crediting cash. So what is the rule? Debit what comes in, credit what goes out. So cash is going out and our liability is finished. Okay, we have debited our liability, we have reduced our liability. Okay, so I hope you have understood the concept of outstanding wages. Simple as that. Outstanding, what do you mean by outstanding? We have to pay this. Okay, this is our liability. Okay, you can see this example. You can see this concept will be applied on outstanding wages, outstanding wages, outstanding salaries, outstanding rent. Okay, whenever you see any word called outstanding, okay, outstanding or accrued expenses, outstanding or accrued expenses, owing, unpaid or due, you will have to apply this concept. Okay, you have to remember. Now see, you may have a question that why don't we do this every month? Because see, for the month of January, the expenses which we have, the work which Mr. X has done during the month of January, he'll be paid on Feb, right? This is the same accounting period, no? This is the same accounting period. He'll be paid on the same accounting period. So we'll have outstanding expenses only when we close our books of accounts. Okay, you have to understand this way. I hope this is clear. Simple as that. I know it will be difficult to understand this in one time. You watch this particular topic two to three times. Okay, it's very important. Okay, you have to have that conceptual clarity. Okay, But simply, and just simply knowing that outstanding expenses will create outstanding expenses, will debit wages account to outstanding wages account. This should not be the way. Okay, you have to understand why have we what's the reason behind passing journal entry this way. Okay, you have to understand. You should have that kind of question, that how did this wages account, why is this wages account debited, why is this wages account debited, and why is this outstanding wages account credited. You have to have that question. Okay, so I hope you are clear with this. Okay, so now let's talk about the treatment of wages and outstanding wages in our financial statements. Okay, so you know that wages is an item of trading account. Okay, if it is salaries, it will be item of P&L account, and if it is rent, it will be an item of P&L account. Okay, so here wages, what you'll have to do, you have to add outstanding wages. Okay, why do we add outstanding wages? Why do we add outstanding wages? Simply because these expenses, these expenses is for the month of Jan to November, right? And these outstanding expenses is for the month of December. Okay, see, we have already received the benefits of the employee, right? We have already received his services. Okay, so these outstanding wages, it relates to what? Current year. The expense relates to current year. So there is a rule which says all the expenses, okay, all the expenses relating to the current year, relating to this current year, will always be debited in that year only. Okay, so if I take an example of, say, if this wages was salaries, okay, it would have gone in this P&L account. Okay, so you have debited salaries to salaries, so you will add here outstanding salaries. Okay, because you have to show the expenses for the month of December, right? Expenses has already, the worker has already given his services, right? He has already worked for the month of December, so this expenses is related to December, but the payment will be made, will be doing it on January. Okay, so that's a different case. Now let's talk about the balance sheet. Okay, how will we show this outstanding expense in our balance sheet? Okay, so this is your balance sheet. This is your liability side, this is your asset side. Okay, so under current liabilities, okay, you will show outstanding wages or outstanding salaries or outstanding rent, as the case may be. Okay, so this is how the treatment is done in our books of accounts. Simple. I hope you are clear. Okay students, so the next concept which we will talk about is prepaid expenses. Prepaid expenses, also called as expenses paid in advance. Okay, so what is the definition? There are certain expenses which may have been paid in advance, that is, expenses for the next year have been paid during the current year. Okay, so what is prepaid expenses or expenses paid in advance? There are certain expenses which have been paid in advance, that is, expenses for the next year have been paid during the current year. Okay, so let's take an example. For example, insurance premium of rupees 2400 was paid on 1st April 2010 for the whole year. The accounting period ends on 31st December 2010, but insurance premium has been paid up to 31st March 2011. Okay, so can we take any other example? Okay, for example, prepaid rent. Okay, prepaid rent can be another example. Okay, be it any expenses, be it any expense. Okay, if it is prepaid or paid in advance, the concept will be same. Okay, we have just covered the concept of outstanding expenses, right? What was outstanding expenses? The expenses which belongs to the current year but we have not yet paid. Okay, it will be paid in the next year. Now what is prepaid expenses? Prepaid expenses are those expenses which relates to next year but will be paid in the current year. Okay, so let's try to understand this with a timeline. Okay, it's very easy to explain and understand things through a timeline. Okay, so what has the question said? The insurance premium of 2,400 was paid on 1st April 2010 for the whole year. Okay, what does this whole year means? For 12 months. Okay, now the accounting period ends on 31st December. See, the accounting period ends on 31st December, right? Now what will be the start of the accounting period? We can say it will be 1st Jan 2010, obviously, right? If it ends on 31st December, so the start will be 1st January 2010. Okay, now let's do a timeline. Jan, Feb, March, April, May, June, July, August, September, October, November and December. So the year end will be on 31st December 2010. Okay, this is the year end. Now what does the example say? We have paid insurance premium on 1st April. Okay, we have paid insurance premium here. Insurance premium paid rupees 2,400. Okay, now the insurance premium has been paid for 12 months up to 31st March. Okay, so see, this is the period of current year. We can say this period is current year, right? Now this period will be next year, right? Jan, Feb, March and so on. So this period will be called as next accounting year, or you can say it period. Now what is prepaid expenses? You'll have to understand now. Okay, it's very simple and very easy to understand. See, we have paid insurance premium on 1st April 2010. Okay, we have paid for 12 months, which means we have paid for the period April to March. But if you can see, okay, this is the current year. Ideally we should pay expenses for only this period, for the current year. Okay, if you are to make P&L account, if you are to make profit and loss account, okay, if you are to make profit and loss account, okay, only the expenses relating to this period will be debited in the P&L account. Okay, but we have paid expenses for the next year also. Okay, so for current year we have paid for 9 months, and for next year we have paid for 3 months. Okay, now we'll have to understand how will we treat this particular item in our P&L account. Okay, see, you have paid the whole amount. You have paid 2,400 on 1st April. You have paid 2,400 on 1st April. Okay, if I have to pass the journal entry, what will be the journal entry? Okay, on 1st April, what will be the journal entry? I have paid insurance premium. Insurance premium is an expense for me, so I will debit what? I will debit insurance expense account. Okay, this is an expense, insurance premium. You can call it insurance premium or you can call it insurance expense. Okay, it will be, the amount will be 2,400. Now I have paid cash or bank. I have paid through cash or bank. Okay, what will be the journal entry? Expense is a nominal account. Okay, the rule of nominal account is debit all expenses and losses, credit all income and gain, and cash is a real account. Debit what comes in, credit what goes out. Okay, so this is an expense and this is cash is going out. Now this is the entry which we have passed on 1st April 2010. 1st April 2010. Now don't you think, just give me a logical answer. Okay, just think, okay, logically, don't you think in this 2,400, this 2,400 is for 12 months? 12 months. Out of this, only 9 months expense belongs to the current year. Okay, so 3 months expense will be for next year. What will be the amount? 2,400 into 2,400. This is for 12 months. So if I take it out for 3 months, what will be the amount? 600. Okay, now this 600 is for the next accounting year. These 600 expenses which we have paid in the current year is for next accounting period, right? In the previous example, outstanding expenses, I've told you that when we prepare P&L account, okay, when we prepare profit and loss account, we will debit only the expenses related to current accounting period. Okay, now if we are to take out the current accounting period, what will be the amount? 2,400 divided by 12 into 9, it will be 1,800. Ideally we should debit only 2,800, but how much we have debited? 2,400, and cash account has been credited with 2,400. Right, now we have to make adjustment for the 600 rupees. Okay, we have to make adjustment for the 600 rupees. Okay, 2,400 minus 1,800, we have to make adjustment for this 600 rupees. Now this 600 which we have paid in advance, this is called as prepaid expenses. Prepaid expenses. Simple. I hope you have understood. Okay, so see, this is 9 months. This period will be 9 months. Okay, this period will be 9 months, and this will be 3 months. January, February, March. We have paid premium up to this period. 3 months for next accounting period and 9 months for current accounting period. Okay, now at year end, what we'll have to do, we have to pass a reverse entry. Okay, see, insurance expenses account to, we have debited insurance expense account to cash and bank account. Okay, now we'll have to pass reverse entry on 31st December because we have debited our expense account with 2,400. Ideally we should debit with only 1,800, so difference amount of 600 we will have to make adjustment for this. Okay, so now what will be the journal entry? If I have debited insurance expense account, now if I have to reverse, what will be the entry? I will have to credit interest expenses account, right? I'll have to credit interest expenses account. Now with what amount? With 600. Now what will I debit? I'll have to debit something, na? Can I debit cash or bank? Can I debit cash or bank? No, I cannot debit cash and bank. Why? Why can't I debit cash and bank? Simply because this cash has already been paid. This cash has already gone out of the business. Okay, now there is no such rule that you will have to only take into account the cash which you have paid. Okay, which relates to the current year. If I do that, there will be a mismatch in my cash balances. Okay, there will be a mismatch. See, really I have paid out 2,400, but if in my account I have credited only 1,800, there will be a mismatch of 600 rupees, right? Which simply means my books will show that I have paid this much, but actually I will be paying this much. Okay, so we cannot debit what? We cannot debit cash and bank. So what will I debit? I will debit what? Prepaid insurance account with 600. With 600. Simple. Okay, now this prepaid insurance, how will we treat this prepaid insurance in our financial statement? We will see that. Okay, okay, so how will we treat these prepaid expenses in our account? Let's see. First of all, if you are to prepare profit and loss account, okay, this will be for the period 1st Jan to 31st December 2010. Okay, if I am to prepare my P&L account, how will I show the expenses? This is debit side, debit all expenses and losses, right? Now on 1st April 2010 I will be debiting to insurance expense account with how much? What will be the amount? 2400. I have the expenses which I have booked on 1st April 2010 was 2400. Now at year end 31st December I'll have to reduce my expenses. I have to reduce my P&L. Okay, because this P&L statement will only show the figures for the period 1st January to 31st December. Okay, so what will I have to do? I'll have to less what? Less interest expenses. Sorry, this is not interest expenses, this will be insurance expense. Okay, insurance expense. Okay, so I'll have to less insurance expenses with how much? With 600. So what will be the net amount? 1800. See, 1800. Okay, so are you clear with this concept that in the P&L account we will only show those expenses which relates to the relevant accounting period? Okay, which relates to the relevant accounting period. Now how will we treat this particular prepaid insurance in our financial statement? Let's see this now. Okay, so we have debited prepaid insurance account. Okay, so we'll have to take this in our balance sheet. Okay, when we prepare our balance sheet, under this will be fixed assets. Under current assets we'll have to show prepaid insurance 600. Okay, now why is this our asset? You will have a question, why is this our asset? Why is prepaid insurance an asset? The answer is simple. See, the expenses, the benefit of these expenses, when will we get the benefit of these expenses? In the next financial year, in the next accounting period. Right? Now, as of now, we have received only benefit of 1800. Simple. See, our cash has been reduced by how much? 2400. But out of this we have received benefit of for only how much? 1800. So 600, the benefit of rupees 600 which we have paid in advance, we are yet to receive. When will we receive? When will these expenses be recorded? During this period. Okay, so we'll have to record this difference as our prepaid insurance and will be our current asset. We'll record it as our current asset in our balance sheet. Okay, I hope this concept is clear to you. Now see, what will normal students do? Okay, other students, what will they do? They will say if there is outstanding expenses, okay, you will have to add it in your trading or P&L account, and if there is any prepaid expenses, you will have to less it from your P&L account. Okay, this should not be how you should understand. Okay, things. See, outstanding expenses. What was outstanding expenses? Okay, we have paid till Jan to November. Fine, we recorded this as wages. Now for the month of December, right, payment will be made in January, next accounting period, but these expenses has already accrued. The payment, the liability, the due, okay, our liability to pay the expenses has already arise. So that's why we used to add outstanding wages in the trading account. Okay, similarly, in case of prepaid expenses, okay, we have debited P&L account with 2400, but out of this 2400 we should ideally, okay, the current accounting period, what was the expense for the current accounting period? It was how much? 1800. Okay, so this 600, the difference of 600 will be reduced from the prepaid, from the premium expense account, okay, from the insurance expense account. Okay, simple. I hope this is clear. Okay, let me summarize, let me sum it up again. Okay, see, what is a prepaid expenses? Prepaid expenses is that kind of expenses which relates to the next accounting period but have been paid during the current accounting period. Okay, now give me a logical answer. Okay, do you think it will be fair to debit whole amount in the P&L account? Whole amount in the P&L account? No. Why? Because the expenses, this 2400 include the expenses which will arise at this period. Okay, so it is, I have told you a rule, right? A golden rule, that P&L account will only include what? P&L account will only include expenses relating to the current accounting period. Okay, so whatever expenses it's for the future accounting period, will have to subtract from the amount debited. Okay, I hope things are clear. Okay, because this is a very complex or a technical concept. Okay, if you don't understand, you simply comment on the video that, sir, I'm not getting. You can call me sir, you can call me brother, you can call me by my name also. Okay, I'm very flexible with that. You say that, sir, I don't understand the concept of prepaid expenses, can you please again explain it in a different way? Okay, or in case of outstanding expenses, if you don't understand, I will be okay to explain it in some other way. Okay, in the way you understand. Or if you don't understand, you will mention, I don't understand this part. Okay, so I will continue with this lecture, with this basic lecture. I hope I'll be taking around 2 lectures for this demo concept lecture. Okay, because demo this conceptual clarity, if you talk from my perspective, from my own point of view, okay, these all things, when did I get to learn? When I joined CA. Okay, so I'll be, you should feel lucky, okay, that there is someone who can teach you the conceptual things in a better way or in a detailed manner. Okay,